Are you looking for safe investments that can provide high yields even during economic uncertainties? Imagine owning stocks that not only offer impressive dividend payouts, but also have a track record of stability and growth, regardless of market conditions. Today, we'll uncover the 7 safest high-yield dividend stocks you can hold forever. These are the stocks that can secure your financial future, compounding your returns year after year. Stay tuned as we dive into these top picks and discover why they should be a cornerstone of your investment strategy. I remember a time when I was uncertain about where to invest my money. The stock market was volatile, and I wanted something reliable, something that would provide steady income without the constant worry of market fluctuations. That's when I discovered the power of high-yield dividend stocks. These stocks not only offered regular income, but also had a history of stability and growth. It was a game changer for my financial strategy. So why is this topic crucial for you? In today's unpredictable economic climate, finding safe and high-yield investments can provide peace of mind and financial security. High-yield dividend stocks can significantly boost your portfolio's performance, ensuring that you not only preserve your capital, but also see it grow. Ignoring this strategy could mean missing out on substantial long-term gains and a reliable income stream. But did you know that Stock 3 and Stock 6 could be the key to unlocking unprecedented financial security? Keep watching to discover why these 2 stocks are game changers for any portfolio. If you want more tips on building wealth, hit the subscribe button. Your support helps us create more valuable content for you. 1. USA Compression Partners. Let's start with USA Compression Partners, ticker symbol USAC. USA Compression Partners is one of the largest natural gas compression companies in the U.S. Despite recent low gas prices and mild winters, their business has been growing and churning out profits. In the most recent year, their revenue grew by 16.3%, hitting a new high of $229.3 million and beating analysts' estimates. They also issued $1 billion in new 7.113% senior notes maturing in 2029, allowing them to redeem higher interest debt and pay down their revolving credit line. This strategic financial maneuver earned USAC an upgraded credit rating from Moody's. With a current yield of 8.8%, USA Compression Partners is a compelling choice for dividend investors. 2. EPR Properties. Next up is EPR Properties, ticker symbol EPR. EPR Properties is a Kansas-based real estate investment trust, or REIT, that invests in amusement parks, movie theaters, ski resorts, and other entertainment properties. Despite fears of a real estate crash, EPR has shown resilience due to strong housing demand and a solid labor market. In the first quarter, they reported earnings per share of 75 cents, surpassing expectations, and total revenue of $167.23 million, also exceeding forecasts. EPR has built an incredibly stable foundation with 93% of their $6.4 billion portfolio being experiential and 99% leased. With a dividend yield of 8.15%, EPR Properties is positioning itself for long-term success, making it an attractive option for dividend investors. 3. Main Street Capital. Moving on to Main Street Capital, ticker symbol MAIN. Main Street Capital is a high-yield company that consistently delivers impressive returns. In the first quarter, Main achieved an annualized return on equity of 17.2% and grew its net asset value to a new record high. Their distributable net investment income of $1.05 per share provided substantial coverage for the monthly dividends. Main has seen growth in both its lower middle market and private loan segments, and with consistent quarterly dividend payouts, this company is well positioned for long-term growth. The current yield is 5.82%, making Main Street Capital a solid pick for your portfolio. 4. Topaz Energy. Next is Topaz Energy, ticker symbol TPZEF. Topaz Energy is an indirect energy play that invests in energy companies. They have been very consistent and have seen solid dividend growth over time. In Q4 2023, Topaz achieved royalty production of 19,600 barrels of oil equivalent, exceeding their own guidance. With a 10% annual production increase and a 7th dividend raise to 32 cents per share, reflecting a substantial 60% growth since early 2020, Topaz Energy is in an excellent position to continue providing reliable dividends. The company's infrastructure assets have operating margins of 95%, requiring minimal ongoing maintenance expenses, further strengthening their financial stability. 5. Conagra Brands. Now let's talk about Conagra Brands, ticker symbol CAG. Conagra has shown steady improvements despite a challenging market environment. While the stock declined by 11.7% in the past year, it's up 2.5% year-to-date. Conagra's investments in frozen foods are starting to pay off, with a sequential rise in frozen food volumes from the first quarter. Their strong pricing power in the grocery and snack segments also bodes well for future growth. Conagra's diversified portfolio provides valuable stability during uncertain macroeconomic conditions, making it a smart choice for dividend investors. 6. Enterprise Products Partners. Enterprise Products Partners, ticker symbol EPD, is another top pick. EPD is a midstream energy company that is very insulated from volatility in natural gas and oil prices. In the recent quarter, EPD reported operating margins growing by 7% to reach $2.5 billion. Their successful startup of new natural gas processing facilities and strong demand for energy exports fueled this growth. With cash available for distributions hitting $1.9 billion, providing 1.7 times coverage for the 5% distribution raise, EPD's management is wisely reinvesting profits back into the business. With a 7.11% yield and 27 straight years of raising distributions, Enterprise Products Partners is a reliable high-yield stock. 7. Verizon Communications, VZ. Finally, let's look at Verizon Communications, ticker symbol VZ. Although it's been a challenging few years for Verizon shareholders, there are signs of a turnaround. Verizon generated $2.7 billion in free cash flow in the recent quarter, while growing adjusted EBITDA to $12.1 billion. This cash flow is crucial for continuing to reward investors through dividend payments. Their MyPlan offerings, including Netflix and other perks, are helping drive ongoing revenue streams. With strategic cost-cutting efforts gaining steam, Verizon's high-yielding dividend at these lower share prices seems like a wise long-term strategy for income investors. Investing in high-yield dividend stocks can be a game-changer for your financial future, providing both income and peace of mind. By choosing stocks with proven track records of stability and growth, you can build a robust portfolio that weathers market fluctuations and generates steady returns. If you found this video helpful and want to see more content like this, please consider subscribing to our channel. Your subscription is like a donation that allows us to continue creating valuable and informative videos. Hit the subscribe button, and together, let's build a community of financially empowered individuals. Thank you for watching.